Hey, what's up? Today we are talking about types of trading. So let's get started. First, day trading. Second, swing trading. And next, long-term investing. So in starting, we are talking about day trading. Day trading is a type of trading where positions are opened and closed within the same trading day. Day traders often use technical analysis and short-term market movements to make quick profits. They may also use leverage, which increases the potential return but also increases the risk. Day trading is considered a high-risk and high-reward trading strategy. Second one, swing trading. Swing trading is a type of trading where positions are held for a few days to a couple of weeks. Swing traders also use technical analysis and focus on short-term market movements, but with a slightly longer time horizon than day traders. Swing traders try to capitalize on the natural ebb and flow of the market, and tend to have a lower risk profile than day traders. Next, long-term investing. Long-term investing is a type of trading where positions are held for a period of several months to years. Long-term investors tend to focus on fundamentals such as a company's revenue, earnings, and management. They also tend to look at macroeconomic factors such as interest rates and economic growth to make their investment decisions. They tend to have a lower risk profile as well as a lower return than day traders and swing traders.